Welcome to Bitcoin Escape Plan. We've got a major momentum shift right now for Bitcoin that we're going to be covering in today's video, and you won't want to miss the key levels that will determine whether this relief rally is going to continue or whether we are already on our way down to lower lows. Later on in the video, I will go over the higher time frames so that we have a better historical understanding of why the price behaves the way that it does at this time of year and what we can look forward to next on the chart. And at the end of the video, I will cover the perpetual trade that I am in, which even though it is in loss, I feel pretty good about it. I've learned a lot trading these Nano BTC perpetual contracts, and I like it a lot better than other trading vehicles. So that's going to be pretty great. Check it out at the end of the video. If you are new to Bitcoin Escape Plan, then check out the website, bitcoinescapeplan.com, every Monday, which means later on after this video, I will be releasing a weekly newsletter that just goes over the key levels on the chart for that week. Basically a written version of the videos that I do here that you can check whenever you need to without having YouTube in front of you. Bitcoinescapeplan.com, go check it out. All right, back to the video, 4-hour analysis. What are the key levels that are most important right now? We just had a serious interaction with this bottom band of the downtrend anchored VWAP. Now a brief reminder for anyone who is not already a subscriber of this channel. The downtrend anchored VWAP was drawn from the 126 all-time high in October. What that tells us basically is just the average volume of the price between this range. And at the moment, we had broken below it in about January and broke back above it for the first time in early March. We have broken back below it and reclaimed it now. And it's a little bit hard to see with all the lines there, but we are still above this bottom trend line here, that's drawn from the 59.9K bottom earlier in February. And we are still failing at the moment this 126K downward trend line as well. And basically, just to give us like a larger historical context of what we're looking for, we're waiting for an interaction somewhere in the middle to the end of April, where we will know definitively, okay, is it gonna break this blue one or is it gonna break this red one? And that's gonna tell us very clearly, do we have sustained momentum to the upside or do we have sustained momentum to the downside? Now, me personally, I believe that it is going to fail this one and break this one. Now, it is possible, it is the other way around. We may have an initial test here that brings us higher to the red one, but I do think ultimately the price is going to fail somewhere in here, even if it does break it and then come back down below it. I just think it's more likely, given the historical context, that we will continue to see that go downward. I'll go over that more later on in the video. On the 4-hour at the moment, this is the most important thing that I think we've seen from last week. Obviously, this is not good for price for it to start declining so sharply after making a local high at around 76K, which was good initially. It was going into that range pretty healthy, really building momentum for that. And then it gave up almost all of that momentum in the middle of last week, which I believe is just the news, like the news capitulated that. It's fair, like when there's increased uncertainty, something like Bitcoin is going to be one of the first things to sell off. Like you just have to accept that that's reality. And we need to provide that within the broader context of what's going on. It's not like the 4-year cycle is just like some cookie cutter, like it has to happen this way. It's like typically there are reasons why the global economy functions the way that it does, in certain periods of time. There are certain periods of time where more companies are going to go bankrupt. There are certain periods of time where more companies are in record profits and are, like doing share buybacks or whatever. Like yes, there are some businesses that don't operate in the same parts of the cycle or that benefit from different parts of the cycle, but that is not arbitrary. Like Bitcoin was designed that way for a specific reason because it fits in alignment with that. It's designed to suck up some of that liquidity and uncertainty, even if it's sucking it up in the form of sell pressure instead of buying pressure. It gives people an option of a button to push when there is something stressful going on. And then it continue to trend higher over time. So at the moment, the 4-hour SMA dropping down and curving to just above that bottom band of the downtrend anchor VWAP I view that as a very bullish signal, or at least not a bearish signal. At the very worst, a neutral signal. But I would say that's fairly positive. For the price to behave this negatively and for the average to still fight to stay above that, that shows us that we have some room to head towards this middle band. This middle band is currently at 84.7K. Now, do I believe that we get there? No, I do not. I think that we're going to fail on our way there, probably at this trend line, to be honest. Which means best case scenario, we're just going to see another attempt towards 76, and maybe it breaks it, maybe it fails it. Right here at the moment, it's looking like it's going to be a failure, probably. It might get slightly higher, but it's not going to get much higher. And that'll really depend on if we start seeing buys actually step up more consistently. There's a decent amount of buying volume all throughout this, whereas at the moment, it's kind of more sell pressure. So we'll need to see if this week we have enough buying pressure to get us back up to that 76K, or if it's more likely that we retest this guy and continue to break down lower. So in the short term, we did just see another wick break the top side of the Bollinger Band. So temporarily, there's a little bit of pressure downside. However, again, because this has sloped upward, that's good. That gives us the permission for the price to continue trending up, even if it does kind of chop around wherever the Bollinger Band expands to. And it does look like it is a period of expansion right now after initial contraction. It broke down lower, but managed to respect that trend line before heading higher. So this the new pivot that has popped up is 70.4K. I'm still sure that the 70.8K one is pretty important at the moment. Price is sitting just barely above that at 71K. So I would imagine that that is still the more important one at the moment, and the price is certainly reacting to that one more than it is the 70.4K one. And then we pretty much just want to pay attention to that old level that I talked about a million times. That's 73.8K, 73.7K. That's the March of 2024 all-time highs. And it is an important psychological level. Like that point matters a lot, how the price behaves at that. So there's nothing preventing it actually from behaving negatively at that price and then just continuing to drop down. Like 76 may have been the high that we were going to see, and I'll actually show you on the chart in a moment when we go to the higher time frames. I'll show you why it's possible that that is actually the highest that we're going to get now, even though I really wanted us to be able to go towards 80, but I don't think so. I think we're about to see a massive flip to the downside. So that's what we want to look for at the moment is, does the 4-hour SMA continue to curve upward? If yes, cool. Then price can continue to go upward until such a time that it breaks back below it. Now, obviously, it chops back and forth on it pretty frequently, but it has been pretty clear when it has an interaction recently. There's normally a bounce off of it, followed by a break. This one had a couple bounces. Yeah, let's go to the higher time frames. So, higher time frames. First, let's start off with that thing that I just said, the evidence that 76K may be a local top. So that's this guy. We just bounced off 76K. So right here, this is 74.4. This is 76.7, which is slightly higher than we've been able to reach now. And then right here is about 78.3. So I would call that between about 75 and 78 is basically the bottom wicks of this March and April 2025 drops, which would have been probably the last time that IBIT holders really had to decide, okay, I'm getting close to break even. Do I want to buy more, sell more, whatever? That's the last time where probably a decent amount of money jumped in there before all this sell pressure. Actually, it's here is when a lot of money came in. It was right around the election. But what we're looking for now is to see, do those prices form as resistance? Are we not going to be able to get past? I mean, those candles close at 82.7. So, we're currently well below that and are not really showing a ton of evidence that we're going to be able to break above it. So that is probably going to form as local resistance, I think. And if we do get any break higher, it's going to be temporary. But the more that I'm looking at it, the more it looks like we're probably going to see in the month of March a failure of this 76.2K pivot as opposed to a break of it. Now, I may stay corrected in 3 days time. You know, we may just see it start to rocket up on the weekly time frame, but this close does push us towards the bottom of this range. Like if we think of this range as being 100%, this is about 50% right here, 70.2-ish, I believe. And for us to close below that, we're actually just barely above the closes for these candles, almost identical to it, like very, very close, which isn't necessarily a bearish indication. My apologies for the car outside beeping. Oh, it just stopped. Excellent. It's not necessarily the most bearish indication, but it does push us closer to 64K than to 76.2K, which is not what we want to see at this stage, you know. So this is the major thing that we're watching. And as I just went over this in yesterday's video, it's already dropped significantly since that point. That's the weekly SMA, currently sitting at 80.8K. Which is basically right on top of that 80K pivot, very close to that 80K pivot that we have previously had, which is also the super important one from March and April of 2025. So realistically speaking, that is going to form as heavy resistance if we even get to it. And it's looking like that weekly SMA is actually going to break down past the 76.2K pivot by the time we interact with it, which means functionally speaking, it's going to form as resistance. Now let's go look at other times in history where that has been the case. So right here, this is March, April of 2022, and it's a very similar story. A worse story, but a similar story. So this, you have to imagine, is the 76.2K pivot. So we had our failure, we dropped back down. We had our failure, we dropped back down. We had one more attempt at it, just barely got it, and then broke down. The only difference being our weekly SMA now has been sharply dropping into this, and we are more over here in our actual part of the cycle, and are just about to experience a similar event to this. We don't have Fibonacci pivots for the 2018 cycle, but you can imagine it's fairly similar. There would have been a pivot point right in here. There would have been a pivot point right in here, you know, so we saw something very similar around March, April. Would have been a slight break above the pivot point here, and then it continued to fail. And in that instance, did not even retest the weekly SMA. It took a lot longer until it retested the weekly SMA. And that pretty much is what we're looking for now. Is our best case scenario is that we retest that weekly SMA. But our more likely scenario is that we continue to fail below it, that we don't actually touch it. It doesn't matter if we touch it now in April or if we touch it in July, the trend is still clear that we're going to go lower. And just as a reminder, the monthly SMA, we have no historical precedent of us reclaiming it so quickly, which means that locally speaking, the price cannot get above about 89.9K, call it 90K. Price cannot get above that, you know, until we have actually been able to round out the full momentum of the bear market, which could be short, like 2018. In 2018, it was 1, 2, 3, 4, 5, 6, 7, 8 months that it took for us to break it and then get back above it. Technically more, if we're talking about actually breaking it, but in terms of actually closing below it, it's about 8 months. It was significantly longer in 2022. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So between 8 and 15 months that we can expect to be below it. We are currently on month 4. So our best case scenario would be us reclaiming it in 4 months. But our more likely scenario is that it's somewhere between 4 and 11 months that we have until we can retest that. Now, in most instances, we do break back above it with significant strength. Well, I guess not that significant here, it did kind of chop. But regardless, we have an expectation that it will take on the longer side to actually consistently close above it. So not really any reason for us to magically go higher on both the weekly and the monthly timeframes. So that's what I'm expecting at the moment, is the lower that this weekly SMA gets pulled down, the more likely that it's going to form as resistance when the price when it is able to actually break through that 76.2K pivot, which it may not even be able to do if the weekly SMA drops down below it. If the weekly SMA drops down below it and we have an interaction with the SMA first, and it's basically like if you were to have a fight with somebody and like you just barely were able to beat them and you're like barely able to stand, and then a bigger and tougher opponent steps up right behind them and now you have to fight that person as well. Like that is what's happening here. This is our first opponent, we have to fight them, and then we have to go fight the tough guy right after. Or the tough guy continues down and that's the tough guy that we have to fight, and then once we've beaten him, cool, we still have to fight this other guy. Like it's a very tough circumstance for us to be in at this stage of the cycle, while there is continuing to be more and more global uncertainty. It's just not the time where Bitcoin is randomly going to shoot to the moon. I don't know why other content creators make videos and content that is disturbing to me. Like I would rather continue to make content that is based on reality. So that's the longer term view, is that in the short term, we are likely going to have a failure somewhere between the 80K and 76.2K pivot, which will be regarded by a failure of the weekly SMA and continued downside. Once we have a retest of 64K, I would imagine at that point we will probably start breaking below it and then continue towards the 44K pivot. And then it'll be pretty much the same dance, but between 64K and 44K, probably for a period of a couple months. And maybe it drops lower than that, maybe it does not. I've said multiple times on this channel, I believe it could go as low as 34 to 39. That's like the lowest I could believe it goes. It doesn't mean it has to go that below, but me personally, that's the lowest that I reasonably could believe it'll go. Maybe 32 to 35, but 34 to 39 I feel more comfortable saying, somewhere in there. So that's the higher time frames. I'm gonna go over the perpetual trade. Now again, I want to be clear here. I deserve to lose money on this trade. I deserve to lose money. All right, cool. Now that we've gotten that out of the way, because I entered whatever, like somewhere over here. Where are we? We're on the daily time frame. Now I would have entered somewhere over here and was correct that it was a short, and then decided to flip that into a long, and that was very foolish, and I deserve to lose money, period. I did have to sell out one of the contracts. Currently, I think I'm only sitting, I took like a $40 loss, and I think right now I'm sitting on $57 worth of loss, which I gotta be honest with you, is so much better than I was sitting at like $130, $150 worth of loss for like most of the weekend. Oh, this is another thing that I learned that's important. So the overnight hours on the weekend seem to be a different time than they are during the weekdays. I was not paying attention. I was focused on doing parkour and drinking a beer with my friends on Saturday. So when I had to go and close one of the trades just to have sufficient margin, I wasn't like fully paying attention to what was happening in terms of like how long that was. But it mostly just comes down to like having enough capital. And I will say this, compared to trading meme coins or option contracts or any other form of leverage that I've traded, I really like these perpetual contracts the best. It's like not even close. Like I think I've probably paid like 50 cents in fees or something on this position. Let me check the exact amount. In order to be in it for multiple days, 26 cents, probably just because I've been on the other side of the funding rate. So normally, you buy an option contract and you buy it the wrong way and you're incorrect, you're going to be in sustained loss until you're at zero, essentially. Whereas here, I was down for a period of time, and now I chose to jump out, even though I saw I was starting to recover, but I was overextended relative to my cash position. Relative to my cash position, at the moment, I should only be trading 3 contracts during like the intraday session, and I had 4 open. So that was my own mismanagement. I should have only had 3 open, essentially, based on my cash position at the moment in this account. Meaning, like, it could have been avoided by like a simple position sizing change, essentially. So me personally, these are indication of longs. That's why I chose not to panic and take the heavy loss, and chose to just sit and wait it out. And now, like I explained earlier in the video, I don't know if we're going to go back to 76. So I have given up my wanting this to become a trade that goes to 80K, and I'm going to go back to not trying to time larger trend shifts. I'm going to focus more on these smaller ones. All of the trades where I won were these, where it was like a clear short of a break of the Bollinger Band, and then I waited for an SMA interaction and I sold. And that's it. I'm just going to keep it very simple. It was the same one with this one. The only difference is when I traded this one, I had 1 contract. Now I have the money where I can buy multiple, meaning when I got to this point and sold fully out of it, I could have left 1 or 2 to ride, and then could have had part of the trade go like 70 to 90%. And that's really all that you need to have in this circumstance as well. If I had listened to my gut and remained in that short, I would have been in like 90 or 100% profit. So rather than trying to time the higher time frame, that I went over earlier in the video of whether it's able to go to 80K or higher or not, I'm not as concerned about that. For the moment, the price is saying it's going to go higher for a little bit. We did have an interaction with this guy that could potentially break it lower. But as you can see, even with these breaks lower, they did ultimately trend higher still. So normally, you might take that as a quick short, and you would have had to close it pretty quickly. I mean, technically, you could still be in a little bit of profit, but you would have had to close that pretty quickly. Not as clean as these guys. These are much cleaner. Even these are cleaner. So temporarily at the moment, I do think that the momentum is going to remain to the upside. So me personally, I'm just going to kind of wait until I'm back in profit. At that point, I may add to the position a little bit, depending on where we are in relation to 76K. And then I'm going to completely close it, I believe. I don't think I'm going to wait until 76. I think it reduced my cost basis now to just under 73 is where I need to get to. So I would imagine I will probably be fully out of the position not long after that. We will see. There's a possibility, again, that we get some momentum if we can stay above this bottom band, but us having an interaction with that downtrend does make me feel like we're going to have an interaction with the blue one, and I would rather be able to like have the capital be flexible rather than staying in the position. I like what I've learned doing this trading correctly, because I was correct initially to short it, and would have remained correct if I just didn't flip, which I don't even know why I did that, quite frankly, because I don't have a defined rule set for the opposite of the reversal. Like, I have a defined rule set for taking a short in this instance. There's a break of the upper side of the Bollinger Band, which, based on my analysis of the 4-hour chart, is a significant enough anomaly that I can expect downside momentum from it. And therefore, I should just calm down, sat in that 2 or 3% loss, and then been in profit the whole rest of the time. And I feel like I really am going to focus more on like allowing the short-term trend to dictate the perpetual contracts I'm in. Because just to be completely clear, I don't really sell my spot Bitcoin. I don't really sell it at the end of cycles. Sometimes I will sell a little bit, if I need to, like, basically the only time I sell it is if it will improve the quality of my life. So sometimes that means selling it to like pay off some other high interest debt, or to take a trip or something like that. But I typically try not to sell any Bitcoin unless it improves the quality of my life, and typically not in an amount more than I'm planning on buying back later. So I sold less than I'm planning to buy back later at the end of the year. So with my perpetuals instead of my spot, I really just want to be able to play these short-term swings. And like even from this guy here, oh my God, I hate you sticky keys. This is a 5% trade on 10x leverage. That's 50%. That's 50% of your money that you could have made between, Sunday afternoon to now, just by actually listening to the short-term trend rather than chasing the long-term. And that, I think I'm gonna really have to wrap my head around this more specifically around October, because I think it's going to be very tempting at that time to just want to be in perpetual longs and just to ride it out. Because like I said earlier in the video, if we do see that sustained drop down towards 44 and below, it's going to bottom somewhere over there. And having maximum leverage exposure at whatever the local bottom is just means you're going to be in profit forever on a leveraged exposure position. So imagine being able to take leveraged exposure at 20K onto 120K. That already in and of itself is like a 6x. That's like a 600%, 600% normally. So at 10x, that's a 6,000% on your money. So that's insane. Very, very hard, like a 60x. Very hard to not want to have some exposure to leverage at that time. And basically that's what I'm taking the year to do personally. Like that's what I'm really focused on. That's what I'm like building a membership and a group around, is I want to get really proficient at trading the 4-hour Bollinger Band breaks. And so far they've been pretty clear. The only reason why I did flip on this one is because I thought we were going to see a play out towards that 80K happen quicker. And then, of course, the news dropped like the next day and we dropped off a cliff. And then I was correct to have listened to the indicator in the first place. So I think I'm going to just listen to the indicator for a while rather than trying to have, my own bias of what the price does. Even if I'm correct, which I believe that I am, I just think it's going to take longer into April for us to see that, as opposed to it all happening now. I think sometimes in the heat of the moment, it feels like it's all happening right now, and that's not correct. So it's better off in this instance to just listen to the chart, which in some cases, say you had bought up here for the short. I hate you, sticky keys. Listen to me, submit to my will. This would have been about a 2% trade. And then obviously it broke to the other side of the band. So at that instance, that technically is an indication of a long. Now you might have to wait a while, but that would be a reason enough to close that trade. So you again would just need exposure to multiple contracts in order to be able to wait it out. But if you waited out the full expression of that trade, that's about 100% on your money, like very close to 100% on your money, which is pretty crazy just for a couple days being in the trade. So I really like it for being able to have leverage exposure to short-term trends. I just think you need to be very clear about your entry rules, and you need to be prepared to experience significant losses when you ignore those entry triggers. But if you have the solid entry triggers and you obey them, so again, in this instance, Saturday and Sunday would have been entry triggers to the upside that I will imagine people will be rewarded by in the short term. We haven't quite flipped this down yet, so we have reasonable expectation for the moment that we will continue to trend towards the upside, which is what I'm waiting for, so that I can close these contracts so I can get back to just focusing on properly entering trades instead of kind of rushing it. Which sometimes it can be hard in the moment. Like if you're looking at all these candles, how do you know which one to long? How do you know? Do you just wait through all of them? Do you add a little here, add a little here, add a little here? I think that's what I'm trying to wrap my head around. Like I think on a break in general, the rule should be to have at least one contract and then maybe periodically add to it as it becomes clear. Which again, in this instance, I think it's tough. It would have been tough in this instance not to close it here. So I think all you can really do is just trust the local trend. I like having the SMA or a Fibonacci pivot be what I would take as an exit. You know, for this example here, I chose not to take this guy. That technically is a short. I chose not to take that because I knew this is probably as low as it was going to go. Now that's still whatever, like a 1 or a 2% trade. I hate you, Sticky Keys. I hate you so much. Please do what I need you to do. It's a 1% trade. So not really worth chasing. I had every expectation that was going to continue to rise, and it did. I believe I took it like here before I shorted it and closed it like right there. So primarily for me, that's what I would be looking for here is add 1, add 2, add 3, close 1, close 2, let the other one run. And then obviously I'll change that over time as I have a larger position size, but just while I have like a very small position size and while I'm kind of learning the overnight hours and just in general how to use these contracts versus other forms of leverage or other trades, I still, like I said earlier, I'm stoked. Like I'm very happy with how I can just focus on the Bitcoin chart with these Nano BTC perpetual contracts on Coinbase. Very simple to trade, to get in and out of. You are directionally biased. You're only able to be either long or short. You can't have both. So there is an argument for some instances to be buying the futures contracts as well as the perpetuals contracts. But at the moment, I'm really just focused on understanding the perpetuals fully. And even if you only get, you know, a trade setup every couple days, I still think it's like better to take these little scalps and then wait for the next one than to stay exposed for all of the chop. Like it just doesn't, I don't really see the benefit of that unless you are getting the absolute lows. Like obviously if you longed at 59.9, then there would be no reason for you not to be still chilling in that long this whole time. You know, but most of us are not going to time the absolute perfect ones, or even these guys. If you were lucky enough to have a long from there, I mean, you pretty much are just looking for structural points of weakness or strength, which I think are a little bit hard to define at a time after like a major drop like that. Like it's kind of hard in this particular regime to trade that way. So I think it's better for shorter term swings, is you're increasing your exposure to Bitcoin during short term swings and you're getting out and you're waiting for the next one. Is how I'm really trying to like build my own mentality for it within the broader context that I laid down for the rest of the video of the higher time frame analysis and just believing that we are about to see a major capitulation event that does continue to drag us lower, at which point I would imagine I'm just going to buy as many shorts as I can and then just sit in that and just wait. And that's pretty much it for this video. So go check out the newsletter. That'll be out right after I release this YouTube video. I will give an update on Wednesday, as always, on the direction of this trade. Hopefully I'll be out of the trade by then, but we'll see what the momentum does in the short term. If you have any questions, feel free to leave them down below. Like and subscribe, and I'll see you on Wednesday. Go read the newsletter.